Trader Stephen Weiss just declared hes holding cash because this market is too unpredictable. Stocks are slipping, and the S&P 500 faces its first 3-week losing streak in a year. The Iran war and Strait of Hormuz closure have pushed oil prices sharply higher, rattling markets. Weiss warns this isn't a time to buy, it's a market prone to sudden crashes. Meanwhile, some investors see opportunity in strong dividend stocks like Starbucks, which is gaining momentum as its turnaround accelerates. That dividend boost could mean real cash in your pocket. But rising oil prices aren't just a consumer problem, they squeeze corporate margins and threaten double-digit earnings growth expected in 2026. That's a direct hit to your retirement accounts. Here's where it gets interesting. If this conflict resolves in 2 weeks, markets could rebound fast. But if it drags on, expect more volatility that will test your savings like never before. Corporate earnings forecasts for 2026 are dropping fast as higher oil prices squeeze profit margins, threatening to cut your retirement fund growth by up to 15%. Kevin Simpson, CEO of Capital Wealth Planning, warns that if this conflict lasts beyond mid-March, your stock portfolio could face a double-digit earnings hit. Here's where it gets interesting. Rising oil prices don't just hit your gas tank, they ripple through your grocery bills and rent, inflating your monthly expenses by hundreds. Starbucks is among companies adapting to this energy shock, with investors watching their dividend growth as a potential hedge against inflation eating your savings. Josh Brown, a top market strategist, highlights that cash remains king in this volatile market, but he also identifies sectors ready to rebound fast once the conflict ends. The S&P 500 is on track for its first 3-week losing streak in a year, signaling your retirement account could face more volatility in the coming weeks. Kevin Simpson, CEO of Capital Wealth Planning, warns that sustained high oil prices will squeeze corporate profit margins, directly threatening your paycheck and 401 growth. Trader Stephen Weiss advises holding cash now, tested calling this a not trading market prone to irrational moves that could wipe out thousands from your investment portfolio. Here is where it gets interesting. If the Iran conflict resolves within 2 weeks, markets could rebound sharply, potentially saving your savings from a $3,000 loss or more. Starbucks is adapting to energy shocks with strategic moves that could protect your dividend income and keep your portfolio's cash flow steady despite inflation pressures. The Federal Reserve's next decision looms on July 15th. Expect volatility that could directly impact your mortgage rates and credit card interest payments. And here is where it gets interesting. Inflation data released last week shows core prices rising 0.5% monthly, pushing your grocery bills and rent higher in the coming months. If this saved you even one bad financial decision, hit subscribe. Your future self will thank you. Drop a comment, what's your biggest money worry right now?